Good afternoon, traders. Welcome to the New York webinar, which is today is going to be more like our regular New York webinar. So let's start. Dollar index. We always start with dollar index. I will take about 30 to 40 minutes. I'm going to go through every single chart on this list. Please hold your chat, hold the questions. When I finish, you will have enough time for the questions, right? No more chat, no more questions. Let's go. Dollar index. Remember yesterday we said on the higher time frame we were expecting more downside. Well, we are getting the downside. On the daily, you can see we were expecting more downside. On the daily, eventually I expect them to retest this low. So on the break of this was a sell yesterday. We clearly identified a sell structure. On the break of the lower flag today is a sell, right? So if you're not in the sell, what you have to do is wait for a sell setup, and you will have to use your strategy to trade because we are not going to give you our strategy. What I'm going to do is I'm going to give you a sense of direction that we are expecting the trade to go. My traders will go into our trading room and use our strategy to trade it, right? Most of my traders are already in trades. So euro, we should be expecting upside if the dollar index is going down. This euro, I think, is short term. So I'm also going to give you an idea whether I think the trade is short term or long term. Because euro may be more in a sideways consolidation. So when I said short term, I mean when it gets to your target, instead of keeping the trade, you want to take profit. Because that is what we do. Or you want to move it to break even at a certain point so that you don't lose, but you take a break even trade when you're up in profit. Or you don't trade that one. Pong going up yesterday, we identified you could enter in the break of this one. So if you use your strategy to enter in the break of it, you're in a good trade, right? We were also looking for the buy of the fib and the trend line, which we didn't get. So it was a breakout trade, right? Pong has more to go. I think Pong has more to go. Now, this could be the start of the next big wave to the upside, whereas we'd have something called a running flat. If any one of your Elliott wavers in here, you would know what I'm talking about. That may be a running flat. I'm not saying it is. We don't have. The only way you can confirm a running flat is the break of the top. And it hasn't broken the top as yet. But on the longer picture, we can expect the Pong to come back all the way to the top here, right? Look at this move here. We're looking for an equivalent of that to the top there. We do have divergence in the daily, right? We have divergence in here. We don't have divergence here. So we may be looking for more downside. On the weekly, we do have divergence. So with this divergence in the daily, it's telling us we could come back all the way to the top here. So the Pong is a good buy long-term trade, not only short-term. You can look for entries on any pullback. So you've had one pullback. If you're not in that one, wait for another pullback, right? And you will also have to make sure that the trade you're in is set up to go. Right? There are other things you look for in the chart to tell you whether it's going to go. This one, it looks like it's going to go. So if we get a pullback, we would look for another breakout. Aussie, I'm looking for a sell opportunity. That does not mean that Aussie cannot go up one more to about the 618 here. If Aussie goes to the 618, we sell. We will be looking for a sell at the 618 with a stop above here. And like most of my trades, if it breaks above, we look to exit the trade. I showed you already, everybody, how we did that in the Pong. If it breaks the stop, it will come back to this area and we will exit the trade. Even if it is going to go down as the Pong is going up, we will exit the trade and we will re-enter that trade on a different strategy. This strategy, we are selling the 618, tells us it should not break out. It should go down from the 618. If it doesn't go to the 618 and they break here, we will be selling. And we will be selling, trying to get it to come back to this trend line, this blue trend line. Right? Once it gets to this blue trend, and we'll be looking at the structure in here to identify. Is it going to go back up or is it going to come down? Based on what we are seeing now, as the structure is developing now, what we see is that there's a chance it's going to come back to this trend line. So when it gets to this trend here, if we get that sell, if we get this sell set up, when it gets there, we will exit the trade. What if it breaks out? What if we sell that 618 and it breaks to the upside? Right? Because remember, this is a corrective structure going down. We are planning for the big impulse to the upside. Right? This corrective structure could come here, one more down, and then go up. What if when we sell the 618, it breaks out? If we're lucky, we get an exit strategy. we exit the trade here and we look for a buy setup. See that? So I'm giving you guys much more than I planned to give you when I started doing the webinar. That is how we trade. We are always looking for wave structures. Let's go. Aussie, New Zealand. New Zealand, stay out of New Zealand. I told all my traders stay out of it. I'm telling you the same thing. Stay out of it. Trade Aussie if it goes up. If it goes down, trade Aussie. Stay out of New Zealand. We're not going to go into many reasons for that. Yen, if the yen breaks here and give you a consolidation, look for a sell setup. Right? Yen could go up on the longer term. I think yen could go back all the way to the top here in the longer term. To the downside, we may see a retest of this low or a corrective structure, one out of two. The reason you would like to sell here, one second, let me just grab my, the reason to sell here is a good idea, right? If you get a consolidation, you sell because they will at least make one more move down if they're going to go up to give you a three-wave structure, or they're going to continue to go down and break this low. Now, in the case that they go down and break the low, you get a 2-to-1, 3-to-1 trade. In the case that they just make one more move down, right? Let me put that in hourly so it is going to be much easier for you guys to see. In the case that this thing comes here, give you a sideways and you sell that sideways for one more here, you can get at least a break-even trade or a 1-to-1 trade, whichever is your choice. If it's me, I'll take the break-even trade. I will not take the 1-to-1 because I'll be looking for it to come and retest this low. I will take the break-even. When it comes back, I look for a buy, and the buy is going to go 4-to-1, 5-to-1, right? So that's how I trade. I trade a little different from most people. I don't really take some of the small trades. I'm comfortable with a 1-to-1 break-even trade. CAD. CAD broke out. CAD, you have to stay out of it first for a while. We broke the downtrend. We broke this daily downtrend. We broke the 240 downtrend. We broke this trend now going down. So we have no idea which direction it's going. As of now, based structurally, this thing is not giving us a clear clue. It will give me a clear clue for a buy if they break this top. I'll be looking for a buy setup here. If I'm looking for a sell, they have to come down right down here, make a correction, and then I'll be looking for a sell. So as of now, I'm staying out of this. For the next 24 hours, probably there isn't a setup for me in this. Stay out of it. For you, probably. For me, no. Right? Swiss, we're anticipating the Swiss to come back to this level. It's coming pretty slow, which is not a good idea. I'm not liking the trade so much because remember when this broke, it came. When this one broke, they went. When this broke, they went. When this broke, they went. When this, even this small one at the bottom, when it broke, it went. This one break and it's not going. That's a bad sign. That means we may be in some kind of a sideways move for more upside. So if you're in the trade like I am in the trade, what you're going to do now is move your stop from here way down to here. So what you've just done, if you enter the trade here, what you've just done is you've reduced your risk. You have no risk in the trade, and whatever happens, happens. It's a break-even trade, right? So if you took this breakout here, and you have your stop up there, stay with the stop for now. You will have to live with that stop for now. And if this move here does not go, right? This move has to go. If it's not going, if it is going to consolidate more, like let's say they come here and they start to do this, you may want to make a decision to move it to break even or take off the trade. Because it has to go. If it's not going, it is creating another structure that is more complex and very likely going to be corrective in nature. That means we're going to be going the opposite direction. That is what I can tell you from my experience of trading. It doesn't go, take it off. It should go. After this type of consolidation, when they break, they go. Look back here. When they break, they go. When they break, they go. If you look at this one, well, this one didn't even break. This one just took off. That was more news event. This should go. If it's not going, we're likely going to see more upside. So you probably want to get out of it for positive. Euro Oz, yesterday I told you, it was at the bottom here, and I said, for me, it's still going to go up, so it's a buy setup. It broke, it's consolidating. If you get into this trade, the only thing you have to be aware of is that this bigger consolidation may not be over. Right? Let me just warn you. Remember I said, if you take this buy, you want to watch it break this top. Come here, break that top. And at this point, you will move it to break even. And what you will wait to see is whether they're going to make a 1, 2, 3 more down. because they made a 1, 2, 3 down. They made a 1, 2, 3 up. They could make a 1, 2, 3 down and then take off. That is a possibility when you do wave structure, right? They could get a much longer drawn out one. And I showed everybody yesterday in the Euro Oz. If you were in the webinar yesterday, the previous Euro Oz, I showed you the previous Euro Oz one where they took a long, more extended corrective structure before they went up, right? I remember going back to the 4-hour and did that. So this could be, in this case, you will take a break-even trade. So if you're in the trade, you don't have to worry as yet. You start worrying when you break this top, probably slightly higher. It's making a little pullback here, then it's probably going to break the top. When it breaks the top, you move this to break even, and you wait. If they go, you're in good trade. If they don't go and they start to come back, you get a break-even trade, right? That is because we're still in the consolidation. We're trying to pick an early entry in the consolidation. We're not sure that we're going to be out of the consolidation as yet, but we will always take these trades. Regardless of whether they become break-even, whether they become losses, you will always take them. Because this could be the start of the biggest up move on this trade. And that means not only would it come to this top, it could break out of that top. So we will take the trade. If you're a long-term trader, if you're a very long-term trader, you need to keep your stop here. And that's a pretty safe stop. So if you can calculate your risk from here to there and that's okay with you for this target, then that's good. But you have to have a huge account to do that because this is a pretty large pip size target. I don't use that target myself, right? As you can see, that's about 400 and something pips. I don't use those targets, those stop size. Because if I do that, I'll have a pretty small lot size entry, right? You'll have a very, very small, and that's not a great one. It's a good risk to reward trade. Traders may post that out, but that's nonsense. You really wouldn't do that as a trade, right? You would come into the lower time frame and figure out your smaller entries here. And if you have to make 3 entries before it's go, that's okay. Because 3 small entries, and if one of them go, you have a very, very good risk to reward trade, right? Most of the time, you could get a very positive trade on all the entries before it goes. Like this one, if you're in that trade, you're likely going to get a positive. It's going to break this top. You put it to break even, and you don't have to worry about it. Euro New Zealand, let's go. It's a sell, but ignore it. Euro CAD, look for the buy setup. If it breaks, it's the same thing as with the Euro Oz. We don't know if this move here is going to meet a move to the upside. This move could be a 1, 2, 3 wave here, and they come back down here before they go. You could have a much longer, drawn-out, sideways corrective structure. Based on what we have here, it is possible for that to happen. But we will take the trade. Again, I'll repeat, we will take that trade every time. Right? Because you don't know which one of it is going to go. Because as this stand here, this is enough of a corrective structure standing on itself alone. Right? As a complete corrective structure. What we don't know if it is becoming a triple tree. So this becomes 1, 2, 3. And that becomes a triple tree structure. Right? So now this could happen to you. Comes here, you give your break-even trade, come back here, breakout, consolidate, start to go. You are in this trade going now. Right? So, okay, guys, let's go. I'm asking everybody to keep their chat until the end of the webinar, then we can go. I'm not sure chat is going on. We'll look at it later on. Euro Yen. Euro Yen, if you're in the Euro Yen already, you could just put it to break even, or you can take some profit or move your stop tighter because they're getting consolidation in here. It's not good. Not consolidated, but it's not moving fast, which means that at some point they may want to start making deeper pullback before they go again, right? That means you probably don't want to give it up. On a 4-hour, I'm still anticipating to move back to the top here. We're getting some divergence here. As of now, that divergence is it's not so strong to worry about because we could still get it crawling up to the top here. You could still have a little pullback in here and go, a pullback, go, pullback, go. If I see divergence here, I'll be expecting one more move down, not the breakout. Let's see. When it gets to the top there, we'll decide. If you're in the trade, like I said, you have two options. Keep it for the longer run that is on top here, move it to break even, or even move your stop much tighter and then re-enter it. In this case, I would say because of the way this is going, you see these are sharp impulses. The way this one is going so slow, I would say you want to move a tight stop, take it off, and then re-enter. It's not convincing that it's going to go and break out this time. Right? Europong, stay out of this. It is likely going to come and tag this stop, but you may not get a very good risk to reward trade even with a good entry. When it gets there, we will come back to this. If it gets there by the end of this week, we'll come back to this trade because there is a huge setup on this trade. A very, very huge setup. Either this thing is going to make one more huge trade back to the low, which is very likely, or they're going to break out for one more big impulse to the upside. So what you're going to do is you could wait until it attack the top and they break this structure to go down. If we're here for the week, when that happens, we will give you the sense of the direction you need to trade this thing for the next 2-3 months. Either down or either up. Right? Either way, it's going to be a wonderful trade. Let's go back to the daily and the hourly. Sorry, hourly. So right now, as it is, if you get a chance to buy, if they come and they break this up, give you some consolidation, you can buy it up. You can buy it up. You can buy it up. It's going to be very, very small trades. Take your profit on every trade. Don't keep it for longer run because they don't have to tag the line. Right? The line has zero value. Remember, I see traders right there. They bounce off my trend line. Remember, that trend line means nothing. It is an indication to you as to where the trend is right now. When you're coming close to where that trend is. It doesn't mean that the price cannot go above it or start to fall from below it. They don't have to go and tag that thing. Right? That's not how trading is about. People focus a lot on their lines. And I keep saying to everybody, the line has no value. Look at the structure. So, like I said, if you're here for the week when the structure changes, we will tell you what we are seeing. Right? Let's go. Pangos. Well, this is a wonderful one, right? I think all of you know we don't even have to do much on this. If it corrects, and it's likely going to correct, you can buy. Buy the breakout. If you bought this breakout and you want to keep the trade for a long run, leave your stop here. Don't move it. Right? If you bought this breakout and you want to keep the trade, leave your stop here. Don't move your stop. Let it consolidate. And those who are not in the trade could still get in this trade, and then you're going to move your stop to break even. And after that, don't worry with the trade for a very, very long time. It goes, you will have one hell of a trade. It doesn't go, you get a break-even trade and you need not worry about it. So the one hell of a trade we're looking for is coming back to about this stop here. Right? When it gets to that trend, very close to the trend, near to the trend, we will make a decision. We will look at the structure and we'll make a decision whether at this point we're going to get more downside or whether they're going to break. The possibility for a Z wave to the downside exists. So we could probably see that Z wave to the downside. It is very, very strong that could happen. To the upside, there are two options. One, it come back all the way to this X wave here before they go down. The second one is it comes here, make a shorter move, and then go back to retest the low before they give you that bigger move. Don't ask me why. That's something my students know why we look at the structure that way. We're not going to discuss why. I'm going to tell you just what we see and how we see it. So it's a good trade to the upside, right? If you get a corrective structure, a smaller correction here, it's a good buy. Pound New Zealand. Remember, by the way, I should say I don't use disclaimer because I'm in Russian. Really, I don't think we have that problem of people suing you because they did some nonsense, right? So let me just in words tell you the disclaimer. What I'm showing you here is my view of the charts. They are not trade calls. So don't freak out if you take the trade wrong and it's not going your way and you don't know how to manage it and you take a loss and it may still go your way or it may not go your way. If you don't know how to trade, don't trade. If you know how to trade, my webinar is just aiding you to see what my views are. You come here to see what I see, what my views are. You come to listen to my views and then decide whether my view suits anything that you are doing, right? You're not coming here for a trade call, for a trade signal. As a matter of fact, I am very much against trade signals. Anybody who knows me, I can tell you it doesn't work. And you know why I could tell you trade signals doesn't work? I have about 100 and something students in my group that I trained. And I'm telling you, but really, really good traders. Some of them are better traders than I am. And we would go in that trading room and we would say, buy this chart right here, right now. Right? Buy this chart right here, right now. Buy right now and we put a stop here and we are going for that target. And there will be 40 people in that room and only about 10 to 15 people will take the trade. Never has 100% of everybody in the room take the trade. And you know why? Because they all have their own views. Some of them don't trade that signal. Some of them are already in the trade. Some of them are waiting for something else. Right? Some of them are doing a whole lot of different story. Right? So that is what you have to be careful of. Signals don't work. You cannot trade like the person who is trading on the other end of it. Right? The person who generates that signal knows what he's doing. His psychology fits what he's looking at. Yours may not fit there. So don't buy signals. Learn to trade. I've never met a trader who said, hey, I'm a great trader because I buy signals. Never happened. And it will never happen. Right? So what you need to do is learn to trade. Stop buying signals. If you've been buying signals, you know it doesn't work. I like how these signals people put out statistics and said, oh, in our signal room, we made so many pips. And I'm like, most of those trades actually, psychologically, you couldn't manage them. I'm serious. We look at it, psychologically. I'm sometimes in trades and out of trades, and my traders are still in them, right? Because we trade differently. We have different psychology. We look at things differently. We have different things to do. I'm going to move my stop to break even because I have to leave. My trader's in front of the computer. He's not moving his stop to break even as yet because he doesn't have enough reason to do that. I come back, I'm out of the trade for break even. He is in the trade 200 pips up. We have had that many times in the room. And the same goes to some of my traders. They get in one little too early, they move a stop a little too tight, they're out of the trade and just watch it go and next 100 pips and say, darn, I should have followed the rule. Right? We all break rules. We know what the rules are, but we all break them. That's what we do. We're traders, right? We experiment, we do different things. So basically, you should not buy signals. Learn to trade. If you want to be a serious trader, learn to trade. Stop buying signals. It doesn't work. Not that the signals are bad. I'm not saying signals are bad. I'm saying it wouldn't work for you because they're not your signals. You can look at a trader's view of things. You can take his advice. You can discuss with him, like what our traders do in our trading room. They discuss trades. They talk about it. They discuss where it's going to go, why, all the rules of it. And then they said, yeah, it's a nice trade. We're looking to enter at this level or at that level. And then everybody decides whether they like the trade or not. That's a whole different story. Believe me, not everybody in that room will take that trade. We've tested that like many, many times. And I can test it in this room. I'll give you a trade setup and I'll say, let's buy here, put a stop here. And we have 157 people in this room. I guarantee you not more than 20 people will take the trade. So almost a guarantee not more than 20 of you will click that button at that point and say, I'm in. And that is why signals will never work. Right? Let's go. By the way, Pong New Zealand. It's in a, let me go back to this. Pong New Zealand, it's in a down. So you see, we are having conflicting. Pong Oz is up. Pong New Zealand is down. Remember what I said about the New Zealand? Stay out of it. There's a good reason to stay out of New Zealand. It's doing what we want it to do, but it's not tradable at the moment. This is looking downside. And I don't think we may get all the way to this low. I think if they go, they're going to go pretty slow. And if you want to see what I mean, look at this previous move down. See how messy it was? When they break, they just broke this low and gone back into consolidation. So by breaking this low here, if they do that and you sell, you can go right back into consolidation before they drop again. And you don't want that to happen to you. So stay out of this one. there is by chance that you sell and it just falls. That could happen if a news event is driving it. So if there's a news event in New Zealand and you think it's going to go down and it's negative news and it starts to go down, it's in your direction that you want it to go, what you can do, right? What you can do is simply put an entry order and let it go. That will work. Then you will probably get something like this. And you can start to see it coming back. But you will have enough time to take profit. Fang Yen, it's a buy. Yesterday we talked about this probably going up. If you're not in that trade, it will correct, right? As you can see, this is a pretty sharp move up. So what I will wait for, I'll just show you to the 4-hour because it's easier to show in the 4-hour. What I would wait for is a corrective structure somewhere in here. And then you can buy that breakout. And you will buy it to break this top, come to about this level, maybe about that level, right? So you're waiting for a corrective structure like this, a corrective structure like that, and then you buy. Wait for the corrective structure if you're not in the trade. It will make corrections. Look at this. They made a correction, and then they went up. So you want the correction, and then you're going to go up. CAD, same thing, stay out of this. So it's not going anywhere. Yesterday, if you remember, I said it's likely going to go down, but stay out of it. We are not sure what the structure is as yet. Fang Chief didn't go down. We were expecting, remember what the trade said? If it breaks this, then sell. If we get a breakout for one more impulse, sell it. If we don't, we're going up. I don't see this as an uptrend as yet. We're still within the downtrend. See that? We're still within the downtrend, so it's not an uptrend as yet. But there is a possibility that this is becoming a much bigger corrective structure. So if we're going to take a trade to the upside, we have a limit, and the limit is around this area, somewhere here. So do we have a trade set up? Yes, you had one here, and if you bought this, take your profit or move your stop to break even, because at any point they could make correction up, and then they'll drop. You don't believe that this could become a much bigger correction drop? Look at the pound Swiss. A much bigger correction in the previous one, and it still dropped below. So what you want to do is don't make that mistake. So let's go back. We were in the pound chief, right? Pound chief. So the dollar Swiss is doing very similar structure. So be careful of this one. The best thing to do is stay out of it. Either until they break the bigger downtrend. If they break this bigger downtrend, that becomes a trade to the upside, and it's a pretty huge trade. If they break this trend going down again, wait, let me just pull this up. Break that trend going, let me take this off. Break this trend going down, then it becomes a very good trade to the downside. So the smaller trades in here are not the best trades to take. Aussie, New Zealand, the consolidation, we came back to this low, but not only did we came back to the low, we broke it. That means it's not a wedge. We're not looking at a wedge structure. We'll take this off. Right? Go back to the daily. We're still in a consolidation, but the structure is not a wedge. We will be looking at it as an A, B, C expanding flat. That's how we'll probably look at this structure. So what we're going to do for a trade, we can either look for a setup on the break of this here, if it goes back up, or if they consolidate here, you have one more short trade to the downside. Right? I would prefer waiting for this consolidation, the bigger one, to finish, and then trade it back to the upside. Aussie Yen came down, went up back, and it could still probably come down here for a C wave before they go back up. If they do that, they may break this trend line. So right now, it's not any kind of a trade setup for us to take. We probably stay out of it. New Zealand, and I think it's the same thing here. This one broke out. Remember, we're anticipating. It didn't give a very good setup, but if you get a setup, you can trade it. We're coming back to this top here. So what you can do is wait for any pullback in here. On a 15 minute, you don't have to do that in a 4 hour. I'll do it in a 1 hour or 15 minute. Yep. Any 1 hour sideways movement you get here would be a good buy in the breakout. Right? You wait for that sideways. So CAD Yen, similar structure. We did get back to this top. Right? Here is where you got to be careful of CAD Yen. See this structure here that we're in? Looks very, very corrective. We're trying to test that top. Retest that top there, and there's a chance we could break down from there. Very strong chance it could break down from there. The momentum in this chart is not very strong. Look at this momentum. That is strong. This is strong. This is not strong momentum. So this is telling us at the point here they could die and go down. This would be a wonderful trade to the downside if it happens. So we are not trading this to the upside. It's going up, not trading it. Wait until either they break this trend. I think I showed everybody this one in the bigger picture yesterday, weekly. Two things that is going to give us a very, very strong trade. Either they break and they give us this trade, or they break and they give us this trade. Very much looking like this one is possible. Right? That one seems very, very possible. So on the lower time frame, you can see that. If they come here and they start to fall, we may break this trend. So we would look for sell setups. And this one is going to be one hell of a trade. You don't want to miss this. You definitely don't want to miss this trade. Swiss, stay out of it. So going up, remember yesterday I said it was looking messy. It may even look like it's going down. Just stay out of it. It's not very clear. And when it's not clear, stay out of it. We're still in the consolidation, and silver, I still think silver up move. It is making an up move. It's going as a corrective structure. That means we're not going to have very aggressive moves like that. This could come back here, and then we're going to look for upside. One more upside is very likely. This is up, sideways, and up. Right? So we're right now in that sideways structure. Right? We've made one, we've made two, and we've made three. The third wave has two options right now. If they're making a flat, the third wave may not come to this low, stop somewhere here and go back up. That is going to be a running flat. They may break the bottom and go back up. Well, once they break this bottom to go back up, we'll also be looking for the possibility of a wedge structure. And that means we would look for buys, but they're going to be short term until we break the top. So you get into a buy, you get it to positive, and you leave it. Silver is always a good buy. If you're ever with me for a long while, you remember this. Silver is always a good buy at this level. And I've been hitting on that for a long, long while. You want to buy silver once it gets into that level. You really want to buy silver. So it is still a buy opportunity. Wait for it to pull back to about the 1457 and just buy the darn thing. As soon as it breaks the low here, I'm buying again. Right? So this is pretty much a good one. XAU. Same thing, we're consolidating. I don't trade gold, I trade silver. Right? I don't have that size of account. I think you need to trade gold. So watch it here. It's coming back. I think we will retest the low. It's pretty much the same structure, expanding or running flat. So that means if they don't retest the low and they break here, you can buy for the upside. Right? It's going to be a running flat. If they come back and retest the low, go back up, you can buy either off the low or buy here. I would not advise to buy silver off the low, buy gold off the low. There's a huge distance gold could go before it goes back up. Silver does not have that. So silver is, money-wise, you can manage. I would not be taking this trade. I will wait for a confirmed breakout before I buy, if I'm buying gold. But I'm trading silver. US oil, we were anticipating this deeper pullback, and we're getting it. I think it's a deeper pullback. I think we're going to get a pullback like this, and then we're going to probably go back more up. We broke the downtrend, right? So daily, we broke that downtrend. To confirm the up move, they need a consolidation, and then they will confirm that up move. Right? If we get some kind of a consolidation here, we are going to get a move to the upside. Wait for that to happen. Natural gas, my traders trade this, some of us trade this, and this has huge opportunity, especially if you're not trading spot trades, but you're trading ETFs or any other stuff like that, options and all of those things. If you're trading, this has huge opportunities. It's on the weekly, this thing was at a low, and I think this thing has huge potential to go back up. Right? Daily, we're still in the downtrend. We broke the 4-hour downtrend, which would be this one. We're making a trend to the upside, but it may still be in consolidation. We broke out here. If you get a consolidation here, which is what they're doing right now, remember I'm on the 240. You can take this next trade up. It consolidates, it make a next trade up. It consolidates, it make a next trade up. And that is how it moves. Look across here. See that? They consolidate here and then they make an extra. So you get a consolidation here. You get once they break this trend line, you're in one hell of a trade to go, right? What else? For those of you who look at rubles, if you're a ruble trader, and my investor just called me this morning to find out what's happening with rubles, because he is a ruble, he's in Russian zone businessman. So I said, if you get this, if we consolidate under here, it is going to be a huge move to the downside, which means we will expect it to come back to this level. We're expecting it to come back and retest this low if they consolidate here. If this thing goes back up in there, we're going back to retest this high. Now, I don't see ruble coming to above 100. The Russian central bank will go crazy. They're not going to allow that. And I think they will go all in to not allow it. Right? They're very comfortable with this range. 50 to 80. They're comfortable. They don't like the top end of it, but they're comfortable with this range. So I think it's going to be manipulated to stay within this range. Structurally, it's set up for that. So remember what I said when you come in here. Manipulation, regular trading, investments, all of that is part of the psychology of the market, and all of that is responsible for the structure. Right? All of that is what creates the structure. Everything you can think of possible that happens in the world has influence on how the structure will develop. And that is what we do. We try to read into the structure. We don't try to read into what the Central Bank of Russia will do, or what the Russian government will do, or what somebody else in relationship to the ruble will do. We don't want to know what the Chinese will do, what the US will do, because we could never, ever be able to know all of that. You don't have that capacity to do it. You don't have the manpower to do it. You would have to be bigger than Bloomberg. You will have an analytical team that is thousands of people. And by the time they finish doing all the analysis, the trade is gone. So we don't have that ability. Don't try to do it. You cannot do it. Try to do what you can do. You can buy a breakout or sell a breakout. That's easy to do. You can see it. You know how to do it. You can do it. It's that simple. Don't worry with people who say, well, I trade the news. Well, you don't know the news, so you can't trade it. You're trading something you don't know. We all can see a breakout. It's that simple. All we have to do is have a good strategy to trade it. And by that, I mean understanding structure. That is what I mean by having a good strategy to trade it. That's it. If you can do that, you're likely going to be successful. I said likely because people call me and say, well, if I take your course, how fast will I become a successful trader? And I always said, knowing me, I always said, I have no clue. And they were like, what do you mean? Well, I don't know if you're a good learner. I don't know if you're committed to that. There are people who took my course and stopped trading. One guy wrote me a thank you letter. He said, hey, thank you for the course, because now you showed me what I need to know, and I really don't have the time to do that. I'm a contractor, so I will stop losing money from now. He said, I've stopped losing money from the day I entered your course. Before that, on a regular basis, every month I was losing money with hopes that I could make this thing work. Now I know it's not that easy to do. That's it. He's still in my group because he has lifetime access to the group. We speak very often. There's a guy from Hong Kong. We speak very often. But he sent me a thank you letter. Said, I'm not trading. Thank you for that. So I don't know if you will become a successful trader. I don't have a crystal ball. I don't know your abilities. I don't know your skill level. I don't know your appetite for risk. I don't know your financial conditions. I don't know your personal conditions at home. I don't know the capital you have. I don't know anything to tell you whether you. But what I can promise you is when you finish the course, you have a very high probability that you can read the charts. And you can stick around as long as you want until we trained you enough so that you can read the charts. That is what I can promise you. I can promise you that I will give you all the rules that we use on how to read this chart correctly. We will train you enough to make you look at the charts differently. Whether you can make those trades, even when we gave you the trigger to pull it, whether you can pull that trigger, is a psychological factor that depends on you. We will hold your hand through some of those trades. and I do that with some of my traders. Every one of you take this trade, even if it's a micro, to make them pull the trigger. Every now and then we do that. We have enough advanced traders in the group to help you do that. Right? So as I promised you guys today, I'll be talking a little on money management. So let's go straight into that now that the webinar is over. And then I will take questions. Money management is very short. It's going to be pretty fast, 10 minutes, and I'll take questions. So if you wrote your questions before I didn't see it, please, I will see it afterwards, right? You will have to retype it. So let's go. Here's the simple thing about money management that most traders, that most of you know of, or most of you heard of, right? Very simple thing about money management. Don't risk more than 1% or 2% in every trade. Right? Everybody knows that. Everybody thinks that's the clue to winning. Mathematically, that's the clue to winning. If you're looking at it from a mathematical point of view. Because if every time you put 1% on a trade, on an open risk, not on one trade, but on the total open risk, 1 or 2%, right? It's going to take you quite a long time, or let's say about 60, if you're putting 2%, it's going to take about 60 to 80 consecutive trades to totally blow up the account. Right? No wins, all losses. Which is very close to impossible, even if you don't know what you're doing. 1% will take you about 200 trades, because every time it's 1%. So it's not like a 100 trade, 100% you have in it. It's 1% of what is remaining. So you will keep making more than 100 trades before you lose the account, which is also not possible. But that's not how trading actually works. Remember, trading is a psychological game as well, right? You are actually, every time you click that button, you're emotionally driven, right? So, and most traders, most players you go, people say, well, I trade without emotions. Well, you really can't trade without emotions unless you're dead. Only dead people don't have emotions, right? Some people say, well, I've taught myself to control my emotions. And I think that's a little freaky, because it's very hard to control your emotions. Most of your emotions, they're not factors that you can control. You need to train yourself very, very long time to do that. Because most of them are triggered automatically. They're what you call, if I can say, podkorkovai. I don't know how to say that in English, but they are like they're something that you cannot control. It's something your brain controls. If you see danger, your brain takes over. That's what happened. Your brain triggers adrenaline into your body. You don't control that. The brain does that automatically. And then what happens? Emotion take control of you. Not you take control of your emotion. The emotions take control of you. It takes controls of your body, and it prepares the body to run, because danger is ahead. You need to turn around and get the hell out of here. So emotions are actually controlled not by you, but by your brain, whether you like that or not. You know, when some people are very emotional, they really don't know. I don't know, and they can't stop. They simply can't stop, because the level of adrenaline in the body, the level of other hormones in the body is so high that unless that level drops, they cannot stop it. They know they have to stop it, they just cannot stop it. Right? So here is how you can take control so that that does not happen to you. Not trying to control that when it happens to you. The only best way to do that is walk away from the computer and all of that, which is a tough thing to do. If you're in a trade, tell you to walk away. Here's how you can prevent that from happening. Prevention is the cure. Here's how you can prevent that from happening, from triggering that emotional feeling from the brain. And you can prevent it by not creating the conditions where the brain will trigger that emotion. It's like, if you don't go in the jungle where you know you can reach with a tiger, that you get scared, you're not going to reach with a tiger. So your brain is not going to tell you to run. Right? When you go to the zoo, you don't want to run away from those animals, because you know there's a barrier between you and the animal. Right? Your brain says, oh, there's a barrier. It's okay. You can go there. We do have some dumb people who try to get into the barrier, but, we're not talking about them. We're talking about normal people who trade. Right? So here's how you can do that. You can prevent the trigger, that emotional high trigger from happening. And it's easy. It's called personal money management. So what you need to do is you need to decide what is your capital. So for simplicity's sake, we'll take a 10,000 capital. If you have a $10,000 and you said, this is my capital, my trading capital, please, if you have $100, $200, don't trade. You're going to lose it anyway. You don't even need to be in an emotional state to lose it. You're just going to lose it. That's it, full stop. Right? It's not a trading capital. So let's say you have a 10K as your trading capital, and you're saying, okay, how do I, don't get into emotional states when I'm trading? So the first thing you have to decide is how much of this money you can lose before anxiety steps in, before you start getting worried. Before it's like, okay, think of this money in your pocket and you want to go to the bar. How much you need to spend before you start worrying? You want to spend $100 and then you will worry, $1,000 and then you worry, $2,000 and then you start worrying. So when you know the sum of money, you decide that you need to reach this level before it really gets very emotional in you. So you decide that up to 3K you can lose, and that would be, it's going to be tough. You don't want to lose, but that will then really get dangerous. You want to stop doing what you're doing and start learning to trade. Right? So you decide 3K is the limit. That's it. You have a limit. You lose 3K, you stop trading, basically. Now, this is the sum from where you start calculating your money management, not from this sum, but this sum. Because this is the sum you need to manage. This is the sum you have. You may even have more than that. Right? But this is the sum you need to manage, because when you hit this target, then you're in trouble. So you see where money management comes in. And this is where the percentage starts to click in. So what you're going to do is you're going to use a strategy to trade, which you should have. If you don't have a strategy, you shouldn't be trading. That's the first thing I'll tell you. So let's say on your strategy, which you have tested, and you should have tested it personally, whether it's strategy that somebody gave you, you should have tested it personally. You tested it and you realized that while you were testing it, you could have up to 10 consecutive losses before you get a win. I'm saying how many losses consecutively you can have before you have a win. So let's say 10 trades you lost, then you get another win. You're not going to do that every time, but once in a while you can get up to 10 losses, 15 losses, whatever that number is before you get a win. I'm putting 10 for simplicity's sake. Right? 10 losses before you get another win. It means that this 10 losses should not wipe out this 3K for you. So as to not let that 10 trade wipe out that 3K, you divided 3K by 2. So it's 1.5. And then you divide this by 10. So even if you get 10 consecutive losses, you only lose 1.5. Half of the one that is supposed to trigger the emotions in you. And then you start getting wins again, right? The win starts to come in. So you bill it back to that level and above that level. And if you do this, if you follow this rule, you will never trigger that emotion where you're getting that high. You will not get rich overnight as well, but you will have consistency in your trading. And in trading, consistency is much more important than just doubling, tripling your account. It's the consistency that makes you a good trader. If you're consistent with the way you trade, it means if you take 10K and you do that consistently and you keep increasing it slowly but surely, in a year, let's say you have 15K or 20K, it doesn't matter, but you're consistent in what you're doing. You will have enough investors out there to invest in you, give you more money to trade because they can see a level of consistency in you, stability. And they're pretty sure if you repeat the same process with their money, you're going to be safe. They don't have to worry that they're going to lose their money. Because all you have to do is repeat the same process. And they know, they can tell you, when you're dealing with investor, you ask them the first question, what is the maximum drawdown you want me to go to before you actually close the account? And that should be this. This here should be the one, blue. This should be how you calculate. If they said this is the maximum drawdown, 30%, this sum should be 30% of that, or 20%, or 15%, and all the rest of your trades should be calculated by that. So you never ever hit that drawdown level they give you. I divided by 2. I just halved it. I just took it into half, right? So that you never get to that trigger. So when you start trading for investors, the first question you ask them, okay, what's the maximum drawdown before you close this account? And they say to you 30%. So what you do is you start counting 15%. You don't go to 30, you count 15. So you will never get to 30. And then you calculate Using your strategy, calculate this so that you will never hit 15%. Or even if you lose all 10 trades, you are only losing 15%. You still have 15% before you start getting wins again. That way, your investor is going to be happy, you're going to be happy, and you will never ever hit trigger emotions in your trading. That's it. That is as simple as it took. It depends on you, your emotions. If your investor tell you 30% and you hit 25%, he's gonna call you like crazy nonstop. He's gonna sit on your back, and you're definitely gonna hit 30% after that. Man, what are you doing? You're 25% down already. I thought we had an agreement. 30 is the max. You shouldn't be doing things. He's gonna be sitting in you for until you get to that 30, and you will get to the 30 the minute he starts calling you. So you don't want that to happen. You divide whatever he tells you, because if he tells you 30, you see, we're human beings. When we think we can bear pain, most of us cannot do it. So if he tells you 30, he literally cannot take 30, but he's trying to man up. Oh, 30, that's okay. He's probably going to start getting crazy at around 20%. So you probably give him 15. That's it. The rest of it, I think everybody knows. One guy called me and says, well, I risk 25% of my trade in every trade. I'm like, okay, good luck to you. You're going to be a trader for a very, very short time. Literally for a very, very short time. You will not be trading very long. You need to hit 3 consecutive losses, and you will never come back from that. 3 consecutive losses, and you will never. If there's anybody in this room who tell me they've never had 3 consecutive losses in here, I would say you're the best trader in the world. All of us in this room have had more than 3 consecutive losses at any one time in our trading career. Anybody here can tell me that they never had 3 consecutive losses? Just give me a yes. I want to congratulate you. Nobody. We've all had more than 3 consecutive losses at any one time in our trading. So if you're risking 25%, you're definitely going to blow your account up. On my account, yep, it's definitely more than 1 to 2% because I am not trading. I'm trading for a different purpose. I'm trading to become a hedge fund. Well, I aspire to become a hedge fund manager. I never know if I will ever, but I'm trading not so much on risk management. I'm trading on money management. I'm trying to kill my emotions with sums of money that I can draw down, and sums of money that I can look. My traders know that. I tell them I trade a little different. I'm trying to increase lot size, not percentage size, because I have to increase lot size to be able to, if I ever get an investor who gives me that sum of money to trade, right? Like one guy called me, he wants to give me $1 million to trade, but he says, he wants to see if I could handle that sum of money. So he wants some kind of proof that I have the ability to handle. And that is important. Remember, psychologically, the sum of money you are handling is also very important. I don't count trades by amount of trades and days. Like for the last 3 weeks, I haven't been trading very actively because I have a small kid, a baby. I'm pretty busy right now, and there's so many other things going on. So I haven't been really trading. My traders know I hope I'm not falling asleep while I'm doing the webinar with them, but sometimes it's really killing you. You need to sleep, right? Actually, just before this webinar, I took a nap for about 2-3 hours. I was out, and then I came back, and then I took a nap, and then I woke up, and I'm in front of the computer for you guys. Because you really need it sometime, man. And I don't sleep a lot. My traders will tell you, I don't sleep a lot, but man, I thought I didn't sleep a lot until the baby came. And then the baby show you what it means not to sleep a lot. He's doing wonderful. I don't want to get him involved in public thing. I don't even post this photo. My friends and family keep saying, "Can you post the photograph on Facebook?" I'm like, no. He has a life of his own that has nothing to do with my public life. Right? It's not going to happen. I'm not going to put that pressure. Some people crazily, their baby, every day they have 3-4 photos on Facebook. I don't see a reason for that. I think that's nonsense. I'm very happy enjoying him. For myself. I don't want him on Facebook. I don't want him anywhere. I don't want him on TradingView. I just want him for myself. At least for now, right? Let me enjoy him. The cost of the course. Let me tell you how the course is structured because people ask me this question. Let me tell you guys how the course is structured so you have an idea. This is how the course is structured. You can join us anytime. We have a group. We are in Slack. We have a group in Slack. Our traders, we have over 150 something active traders in the group, which means when I say active traders, I mean people who are actually actively trading and they're helping each other and all of that, right? So when you join us, we add you to that group. You immediately get access to our trading room. You get access to the 2 daily webinars I do. And then you wait for the next upcoming course. The next upcoming course will be in June. And it's already half filled because there are people already who paid and are waiting to take their course in June. Most of the courses are filled way before the time comes. Right? We have one course that is ongoing. What you also get access to when you pay is you will get access to the ongoing course, the classes, not the training, because we have 2 separate rooms for classes and for training. The classes I do, which is from 6 a.m. to 7 a.m. New York time. I do those classes. And then for 1 week, don't worry about the topics. We do everything. We cover everything you need to know to be a trader. And the first thing we start with is introduction to wave analysis and then trends. People call me and said, well, I don't want to do trend. I have a guy spoke to me yesterday and said, well, I have very good knowledge of technical analysis. You just need to give me a little basic of what you do. I said, no, okay, send me a chart with your trends. And I do this to a lot of people. And they send me and they have trends totally wrong. So I will send them back and say, you're putting trends wrong. I don't care where you learn that technical analysis. That is the wrong way of putting trends. So if you want to take my course, you're going to relearn how to put trends. Because 90% of traders on TradingView are putting their trends incorrectly. Based on our strategy. Let me just clarify that. Based on the way we trade, those trends are incorrect. So that means you start learning how to put trends based on the rules we use to put trends. That's where you start. And I can promise you can talk to some of my traders who have 5-6 years experience that came into the class, thought they knew how to put trends correctly. And you can ask them, they will probably tell you. So 6 a.m. to 7 a.m. is when I do. Everything is recorded, so you get to look at that recording as well. Then, for 2 weeks, you go in smaller groups of about 10 traders each. And then you get practical sessions for 2 hours a day with one of my top traders. And a lot of my top traders are already on TradingView posting charts. You guys have seen them. You like them. Really great people. These guys are really good traders. So you get to do practicals with them for 2 weeks. 2 hours a day, every day, and they really groove you in. When they finish with you, and then when they finish with you, you come and you do practicals with me for 2 days, right? And pretty much everybody who came and did their practicals, I was amazed at the way they did it, really good. And then you get 1 week more of classes again, and 2 weeks more of practical sessions. That's not the end of it. That's the beginning of your learning sessions. This completes the course. And now you start to learn. Now you start to implement that. You start to practice it. You start to make charts, make forecasts, go in our trading room. You ask questions. You get to ask questions. All our webinars are open microphones. You get to ask questions. You get to help from different traders. You learn to do this stuff. You learn to trade it. And then when you think you're having some problem, which you will eventually have, you can talk to me, you can talk to one of my traders, and we're going to set you on the right track. Every couple months, I do what we call a marathon for traders who have finished the course. 8 a.m. Moscow time to 8 p.m. Moscow time, every half an hour with 1 or 2 breaks in between. One of the traders who need help is going to come on and he's going to do a practical session with me. We do this regularly. We don't need them so often, but we do them as soon as we need them. We have traders register for them, and as soon as we have a group of traders who would like to do that, we do one. Which means you need help, you need practicals. You also get 2 daily update webinar that I do, where I update the charts for you daily. So you get to look at the charts that I update and say, oh, I think I have everything right. Oh, I did it wrong, so I need to correct my charts. You get to go into the trading room and ask questions to the senior traders. Guys, I have this chart. I have this setup. I'm looking at this trade. Do I have it correct? Or did I make a mistake? And they will help you. If all of you together in the trading room cannot figure that out, what they do is they send me a message. I join the room, and we all do it together. So it's a never-ending, ending process. You keep learning. You keep mastering what you've learned. You keep working more towards it. And everybody in this group is here to help you once you join the group. There's only one single reason we're in here, so that you can learn and you can help somebody else. This community is really different from TradingView community. I can tell you that. Once you get in this community, it's absolutely different from TradingView community. We don't have trolls, and that is the most amazing thing you're going to find. We have really great people. I mean, amazingly great people in the room. Really nice. You come in and you're surprised how nice everybody's in it, because that is how we keep it. You're only here to do good things. And it's free for the rest of your life. So you don't have to worry about, oh, my monthly payment is up. What would I do for the next month? I don't have money to pay for the next 2-3 months. Or no, you don't have that. We're not here to take all the last cent of money you have with you. As a matter of fact, I used to do these webinars and everything very free. But since we start training sessions, people ask me to train them. We said, okay, let's put a fee that is going to keep out, people who are just here to waste their time. If we don't put a fee, we'll be like TradingView. We want to put a fee to stop that from happening. We want serious people. How can you subscribe to my course? I don't have a website because this was not meant to be in a business setup. All you have to do is add me to Skype. Send me a Skype message. Add me to Skype and send me a message, and I will give you a very short description of the course. So all you have to do, my Skype is MANGAL 457. Everybody write that down. That's my Skype ID. You can find me on Skype on that ID. Send me a message that you're interested in the course, and I will send you the details. Don't ask me dumb questions, because I'm not going to answer them. I'll just delete you. I have no time to discuss those dumb questions. Please. I've had a few people coming and trolling me on Skype like they don't know I could just delete them, block them on it, right? If you're satisfied with what I do, if you would like to join the group, if you look at my chart, you like what I do, you look at the webinars, you like the way I do it, you've seen my account. It's on YouTube. But don't orient. Here's the thing. Don't orient on taking the course based on my account. I'll tell you why. You will not be the same type of trader I am. You will be a different trader. What you need to orient in is, do you need the knowledge? Would you like to learn to read the charts the way I read the charts? It doesn't matter that I am a successful trader. That I can't transfer the success to you. I could transfer the knowledge to you. That's a different story. I could transfer the knowledge of how I read the charts and make you read the charts the way I read it. Make you see the charts the way I see it. But I can't transfer success to you. That is not possible. Anybody who tells you that is lying to you. Anywhere you go and they say, oh, we will make you a professional trader, they are lying to you. Because they don't know that they can do that. Unless they're a magician. What they can do is transfer the knowledge to you. When you go to the university, what they do is they give you knowledge. They don't make you a successful lawyer or a successful doctor. They give you the knowledge you need to become one. And whether you ever become a successful lawyer or a successful doctor depends on you and what you will do further on with that knowledge. That is how it is. That's the reality. So I'm telling you as it is. I'm going to train you. I'm going to help you. I will make you see this chart. We will work with you so that you have the ability to read the charts. You can clearly see, you can visualize where this chart is going to go, and now you learn to trade it. We're going to help you to do that in our trading room. We cannot promise that you will become one of the best traders in the world. You may become one of the best traders in the world, but we cannot promise you that because we don't know you that. We don't know your ability to do that. We all went to school. We are not all lawyers and doctors, right? Nobody promises that when you go to school that you'll become a lawyer or doctor. It doesn't mean we are not all exposed to the same thing. We were all exposed to the same thing. When you Skype me, I'll give you the price. It's not expensive. It's symbolical if you consider you're having a 1 year, if you're considering you're having a lifetime experience with us. Believe me, when you hear the price, you will be shocked. It's very cheap. So, okay, guys, I think that is enough for the course and enough for this. I want to thank all of you for coming. Have a wonderful day. See all of you tomorrow, and don't forget to share the link. Tomorrow we're going to look at charts, and if you guys want, we could look at some topic. Send me on TradingView or wherever what topic you want us to look at. If a lot of people send me the same topic, we'll look at it. Somebody asked for money management. I show you what I think of money management. I'll give you what I think of it. All right? So have a wonderful day. Thanks again for coming. See all of you later. Bye-bye.